Hi there. My name is David Mitchell, Senior Fellow for Tax and Regulatory Policy at the Washington Center for Equitable Growth. The upcoming expiration of many provisions of the 2017 Trump tax cuts presents policymakers with an opportunity for pro-growth and progressive tax reform. Despite promises by its authors and supporters, the Tax Cuts and Jobs Act of 2017 failed to spur equitable economic growth. The evidence shows that the huge tax cuts it provided to the wealthy and corporations did not trickle down to workers in the form of higher wages and did not pay for themselves. Instead, the law was a windfall for the rich that severely reduced federal revenue. In the upcoming tax policy debate, policymakers should learn the lessons from 2017 and from the waves of regressive tax cuts dating back to 2001, and instead embrace a truly pro-growth mindset. My recent report, co-authored with Equitable Growth President and CEO Shana Strom and Senior Policy Fellow Michael Linden, highlights three main mechanisms for how the tax code can foster equitable economic growth for all Americans. First, progressive taxes are a key tool for addressing corrosive yet growing concentrations of wealth and income in the U.S. We know that excessive inequality is itself a drag on economic growth. Not only does it obstruct opportunities, but it also distorts demand and subverts the institutions that manage the market. Making the tax code more progressive will reduce inequality by ensuring the wealthy pay their fair share. Second, taxes generate revenue that can be used to fund growth-enhancing public investments, such as bolstering research and development, ensuring universal childcare, and improving our physical infrastructure. Taxes can also ensure that fiscal policy is on a responsible track, minimizing risks associated with higher levels of federal debt. And third, taxes can directly shape markets and economic choices. Not only can they be used to ensure prices in a market reflect the true cost of a given good or service, they also can incentivize pro-growth innovation and competition. Our report argues that these three channels are largely complementary. And indeed, the policy ideas we present can be especially effective at spurring economic growth because they work through multiple of these channels simultaneously. Policymakers shouldn't miss this opportunity to bolster equitable economic growth in the United States. They should replace the expiring 2017 tax cuts with progressive pro-growth policies to ensure the tax code works for all Americans. For more information on these policy ideas, be sure to read our report, The Promise of Equitable and Pro-Growth Tax Reform. Thanks.